Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. It is Wednesday and another interesting day at the office. Started off today, futures were up 5-6 handles. I think a lot of people were scratching their heads on why the futures were up, considering that lots of the earnings that came out were not that good, and that we were trading down after hours. But whatever the case may be, using our pivots, we tried to figure out what the feel of the market was. And as the day progressed, I think I tweeted around 10:30. I'm like, a lot of stocks went from red to green. It feels as if the market's weaker under the surface than the broad indices are showing. I think the Dow was up like 20 points, and I'm like, what's going on here? Google's down another 5, Amazon's down another 7, Facebook's down, bios are getting slaughtered, VRX is getting crushed, et cetera, and just looked as if, why is this happening? So anyway, what was created today was a lot of red dog reversals to the downside with some outside days. So that could have had you take down some risk if you had long exposure during the course of the past multi-week rally that's gone on, and it's been about 100-something handles. And you look here, I'll tell you why. You go to the first chart. Here's the SPX. So, with that being said, you take a look here. This is your August 24th low. Your first ascending type channel right here that gave you a sell signal on this topping tail, okay, and then that created a move down to the retest, which everyone talked about, which created the W, which gave you a few different RDRs right here, a red dog reversal right here for a long entry, another one right there, and anyway, it cleared the pivot and gave you another move. Okay, this time you had a move above this resistance that was a little cleaner, and then you had a small outside day right here. So if you go like this, first time you see, first day we closed below 2 prior lows, probably a decent day to take down some risk, okay, not knowing where we would go, that were extended from the 8 days, so why not? And then you had one down day here. So if you did take down some risk when we went above, just say 2018, came back below it, you saved yourself some brain power and some pain, and then you wound up making, another move. So the question now was, okay, here, okay, after another move to highs, if you want to look at it this way, what would be the next, troublesome spot that potentially could, bring in some sellers, so to speak? So you draw your little line here, and here is support, which was 2020-ish, okay, which I put on the chart every day. So today you had a, not a drastic move, but a move below it. So if you go like this, and you're looking at it, and you're like, okay, we just went from 1880 to as high as 2040. That's what's that? I don't know. I have no brain power right now. About 160 handles. Maybe we pull back more than a day. So anyway, I would say here is your somewhat ascending channel here. I spoke about that too. That if we were to break and close below the 8-day, maybe we get a retest of this again. So either way, let's go to the spiders. There was more money to be made on the short side of the spiders than the long side. Okay, it wasn't a blaring RDR or outside day, but couldn't push through this spot and close below this 3 days, showing that the bears had a bit more power today than they've had since this day. Okay, and that did lead to another one. And since this, it's been holding the 8-day. So if the speed were to change, perhaps a move to the 21-day happens, which isn't uncalled for, or it doesn't it can't be out of the question. You look at some other sectors. Look at the engulfing bar in the IWM. Guys were talking to me, can I take something short? Can I take something short? I'm like, well, if you want to take something short, probably the Russell. You look right here at the chart, and you'll see, it got rejected at resistance, took out this 3-day support, showing you some downside pressure, and this already took out the 8 and 21 day. So if it's leading the spiders, okay, this is telling you to be short a little bit, okay, and we'll see what's next here. The bios, which have been absolutely nuts, okay, also are still below every moving average. Still having a hard time going down. Also, some guys got caught short today, on the lows. It's been hard shorting anything on the lows. This is when that accelerated trend broke. Remember that one? This was your head and shoulders top formation, giving you clues to take risk off, maybe get short. This is when we went below the 8-day. And you had your measured move, and then you had this ascending channel here that broke right there to the downside. And now, here are those August lows, and look where we are. Pretty darn close. So there are a lot of bears out there saying, look at this, bear type flag ready for a move through there, and that would definitely create some headwinds in the bios. I talked in my note yesterday saying, if we break this little 2-day spot, that could, have some momentum leave, and that was like at 308. So if you were long during this wide range bar and thought we would continue above this little flag, this day got you out, and then you didn't have to deal with the pain of going as low as 295, maybe even got short. Okay, and at this point, this is still kind of hanging in there. It came off the lows because of VRX. While I'm talking about VRX, we might as well get to it. VRX has been, people like Red Dog, how do you stay safe in this market? You're always so disciplined and, you're never in the problem spots. I'm like, well, okay, well, if you look at VRX, first of all, this trend was broken pretty much right around here. Your first shot across the bar was this engulfing day that engulfed this entire range. Remember that? That was your first signal saying the momentum might be leaving. You also closed below the 8-day. Came in, came back up lower high. You also had a breakout failure here where it broke out, came in, lower high, broke through it, and broke this trend. So right here, you could have been done with this thing at 240. So technically, momentum left. Just like a momentum stock or a momentum sector that's a high valuation, the bios are the same way. So then from here, it came all the way in. You had your first bounce off the 200-day. Looked decent until this bar came in. Okay, let's show it a little closer. So if you were playing a bounce in VRX, maybe you made money for these 3 days, but then look at this engulfing crazy bar. That bar told you, just like this one, that danger could be coming. This was your spot to get out of Dodge. And then if you got out of Dodge or got short, you did well. And then here, what broke below the 200-day. And what do we say about stocks below the 200-day? They're not investments. Okay, here, they're not swing trades below the 8 and 21-day. Below the 200-day, they're not investments. And then meanwhile, came in, couldn't rally with the bios. Okay, looked decent a few times. I even tried to buy the 180s a few times here, I remember, and thank goodness I got away from it. And then engulfed this lower range yesterday, and then Citron came out and said it's going to $50 today. Okay, lots of action in it to trade. Some guys made good money short, some, decent long off the boat, off all the recommendations, and now who knows? You're going to have Ackman coming out saying he bought 2 million more shares. Maybe he'll have some friends buy some shares, and the company will refute the article that Citron put out, and now use your 3, 5, 15-minute charts, but make sure you do a level versus a level, because if you started buying too early, you got your doors blown off. In the same way, if you didn't cover shorts into it, who knows if you would have covered on the way back to 130. And now it closed, I think, let's look at the chart one more time. It closed up right around 118 in the middle of this mess. So tomorrow, you'll see how it opens. You'll go to your 5-minute chart. It'll break it down a little bit better for you. You'll see that now here's resistance into 130. And then I guess you would say this is your support, and a little bit more micro support right around here. So you'll see how it opens tomorrow, and you'll use these type of charts now to navigate on top of a bigger, more macro chart, which is right here, which is very broken, and it's been broken. And same way just to show you with Tesla. Tesla's like, used to love Tesla, right, dog? I'm like, yeah, I used to love Tesla. When Tesla was above the 8 and 21-day during this run, look how nice it was. Everyone who started shorting it here got their tushies burnt off. Here, tushies burnt off, and then finally broke below the 8 and 21-day, and then it pulled in. Then what did it do again? Went on another nice trend above the 8 and 21-day. Then right here on this false breakout, okay, it turned into a broken name again. And then fast forward to recently, okay, the day that could have got you thinking Tesla's no longer a good name was on this outside day. Tried to break above this flag and couldn't. That could have gotten you out of your long if you were in it from here, because it was acting well until then. Came in, couldn't get back above it, and then went below the 8 and 21 days. So if you got rid of it because of that, that was closer to 250. And then, now it's below the 200 days since 237, and here you are, 210. Lots of ways to save pain. Lots of ways to switch gears. Lots of ways from thinking long, which I was thinking long in here. And you actually had a nice long. And then on this day, sorry, it's done. Especially when you had the second day, if you waited and gave it another day, which you don't have to. And that was also when the moving average got broken and it stayed below and curved down. So whatever, that's that for Tesla. Google and Amazon are reporting they gave you a pre-earnings run, okay, which if you took your trade off the table, great. You know, it ran above this, okay, after that flag, kissed the highs. It's like a song, kissed the highs, and then, you know, and then pulled back. Once it traded below a prior low and closed below it, that's your out. Now it's back to the 21-day. So you'll see what happens tomorrow. Google earnings are after the close, and I'll come up with a strategy tomorrow on the VTF between 3 and 4. But this gave you your out. You had a nice little tradable long, and then pow. Amazon looks very similar to that. You go to the chart of Amazon, you know, if you shorted early, there's no way you stayed with it because who knows if you could stay solvent during something like that. But it gave you a calculated pre-earnings run when it broke above this support. Okay, right there. Nice little flag above this 550. And then what did it do? It kissed the old highs and got scared. Why would it go through the old highs when you have still earnings to report? So anyway, you know, here was your little doji. Some might have made money short when it opened above it and then traded below it, which is right there. Okay, now you had a 2-day move to the downside. So what traders will be doing going into this earnings, they're not taking a long or short because we don't do that into earnings. Maybe you take options. You write down the pivots. 580. Okay, 580 is a huge pivot. If they crush it and do a stock split or whatever they do, you know, maybe that's a pivot to trade after hours. But you don't go in anticipating that. Remember this pivot that we talked about down here. Okay, that happened a long time ago. You know, if you bought when it cleared this pivot, okay, you did pretty well. And then after hours, I remember this one, you know, once you had time to buy this even though it opened up, you know, and failed. But, you know, that's how you look at those things. And Facebook's not coming out with earnings for a while. It too went back to the old highs and, you know, lots of calculated trades along the way. Here is your red dog reversal right there. Some people would enter on the dip looking for that kind of pattern. That was at like 90.50. Then you also had your momentum buy right here when it cleared this descending channel around 94.50. And then, because I was also long it, I think I was long it on the VTF during the majority of this. And then what happened? Traded above a prior high of 98.57 and reversed. Could it have went through the year-to-date high and went above 100 and squeezed everybody? Yes. But what did it do? Pushed above, squeezed some guys who might have been short during this entire rally that couldn't make it because they thought that was going to happen. Maybe sucked in some longs because I think on this day Jeffries put in a 130 price target, and then reversed. And now it's right on the 8-day. And I guess we'll see what happens tomorrow in the open, whether there's a trader not there, or does it need to come back and test the 21-day like, you know, Google already did. You know, and Google's doing that, again, pre-earnings. It broke the 8-day, now it's at the 21-day, so you'll see. As far as Apple, really nice surgical 2-day trade. Came in yesterday, put a chart in on Twitter, and you know, on my Redler All Access VTF, talked about the potential of this tight pattern expanding with a buy above 112.5. We got it. Nice little bar. A lot of people are like, oh, that's really nothing. But if you're a trader, you know that kind of bar with the right technique could make your day and even week. Then today it opened up flat. We talked about this 114.17. Can you get above there and get another push? Well, it did before reversing. So there is a nice calculated 2-day trade. And we talked about it, this being the pivot to buy. And then it gave you a nice push above the prior high before failing in front of resistance. You go to the 5-minute chart. How could you have handled that? Plus, besides watching us on the VTF and giving the instructions along the way, here it is, okay? This was, let's open this up a little bit. So here is, you know, the trend that it broke above. Then you had a nice channel yesterday that gave you almost nothing in the afternoon. And then once it crossed above the prior high here, look at that clean move. Above 114.17 all the way up to 115.50. That's $1.30. That's a lot of money that you could have made. And then it actually even looks like it made a little head and shoulders top here that on the 5-minute, I guess you could have seen when, you know, it made its peak, came in, lower high, and then look how it closed. And I am out of this trade. But a very calculated trade. Move 1, sideways, move 2, into resistance, take it off, you know, or hold a little bit and trail it, and then, you know, you could always manage it differently there. So that was a nice trade. You know, and that's what we look for. We look for trades, right? Not everyone is a crazy swing trader. Not everyone, you know, has the wherewithal to hold for multiple months. And again, there are a lot of people out there that just talk about shorting, but, you know, if you short a situation, you know, and you don't have the risk or the wherewithal to stay with it until the market confirms your thesis, chances are you might not be able to stay liquid until it happens. So make sure the people you follow, if they have a short thesis, like a lot of people have been talking about how this market's going to fail, and come back, but if they started shorting this day, chances are they did not hold short through this. So, you always want to look for signals, and like I said today, maybe this is your first signal. Okay, close below a 3-day support area on the 8-day. Some high beta names are going to the 21-day, so maybe that happens. The semis, which have been very strong, put in a topping tail today also. So this has had a really nice move and opened up on the excitement of CLAC and LCRX, and closed from green to, green to red. So you want to see if it comes in a little bit. So at this point, you see my VTF. It's the first time there's nothing on there. In weeks, I've tried to ride the rally and move within sectors, be long and short. My gut was trying to tell me to be short. I should be short the Russell today, probably short some spiders and then some individual names. But instead, I'm just going to sit it out, come in fresh tomorrow. There's been more than enough movement to make money day trading and using your tactical setups. So if you don't want to come into a headache, because recently some of these overnight moves have been the opposite of what you think, then being flat's fine. And also, if you've been long, for the last week or so and you're looking for an exit signal, today probably was a decent one. And with all that said, I'll be here for the morning call with Amelia again tomorrow, and we'll navigate it and make sure, if you are signed up for Redler All Access, we have our monthly webinar that will be from 4:15 to 5:15. And lastly, if you haven't heard, we have the Financial Festival, which is less than 2 weeks away, a crazy lineup, an unbelievable weekend all set up. And if you haven't bought a ticket, I don't know what you're waiting for. You get to hang out with a lot of the personalities you listen to on TV, here at T3 Live. Not only are you going to learn, you can have a lot of fun. And hopefully, if you got to talk to the wife or talk to your friends or figure out how to do it, you know what? You don't have much time left, so make it happen, and we'll hang out there. Have a good night.